Let's bring two parties who perhaps have a better sense of what really things are with the cement industry. Joining us on the show right now, Sanjay Gupta, CEO at Star Cement. And we also have with us Navin R Sahadeo from Edelweiss Institutional Equities, who tracks cement as a sector very closely. Gentlemen, morning. Good to have you on the show. Sanjay, if I could, kickstart the discussion from you and taking a lead from what my colleague was just highlighting. The overall quarter gone by, we're getting mixed signals from various quarters. However, demand recovery seems to be robust in many ways. How exactly, according to you, has the second quarter panned out? Give us a round check, even as, floods, weak construction activity were something that the industry was hit by at the start of the quarter.
Yeah, so I think quarter two has been, I think I'll say it has fared quite well for us. Unlike the expectation which we had, because of the monsoon and other, we thought that the demand will be muted. But I think September demand has actually surprised all of us. I will expect that largely in most part of the country, in September, the demand has seen at least 15 to 20% month-on-month increase. And that has really surprised everyone. I think on quarterly basis also, as expected, we were expecting that, the demands will be muted and overall there will be a degrowth in cement demand. But as far as my understanding about the overall industry demand is concerned in quarter two, I expect that it is largely will be flattish in quarter two, which augurs very well for all of us because we are again looking at next two quarters, which are going to be major demand quarter for us. So we expect the demand to really pick up from this from quarter three onwards.
Sure. Naveen, morning. Let's get you in on the discussion as well, because there has been significant traction which one has witnessed, according to our channel checks, from cement companies when it comes to the offtake in the quarter gone by. But do you think this is only pent-up demand, or is there a structural recovery which is at play right now?
I think this could be more of structural as well. So it's always a mix. It's never one clear-cut answer. It's more of structural in the rural areas, I would say, because initial pent-up, whatever was there, that could have been as soon as the lockdown got opened up. Right into the month of August and September, if you're seeing these kind of good volumes, that's certainly structural, especially from a rural or a semi-urban perspective. But I also see that as the urban centers are also opening up, a bit of a pent-up demand would come from the urban centers. We all live in Mumbai, right? And a few months back, all the projects were stuck. But if you look around, most of the projects, you will see some of the activity coming back. So there's a pent-up in the urban, whereas structural more so to say, from the rural and semi-urban side. Hello?
Sanjay, let's understand the cement industry dynamics right now. What is your understanding on where the capacity utilization for the industry is? And once this entire post-COVID rush settles down, are we going to be experiencing pricing discipline within players, or is it going to be back to demand-supply mechanisms? What I'm trying to understand from you, Sanjay, is the following: that is pricing really in favor of a buyer right now or a seller right now?
See, largely our understanding is that the industry is already at around 70-72% kind of overall capacity utilization at this point of time. Going forward, we definitely look that there will be at least some upward bias on the prices. There has been a correction in prices of around 4-5% across various regions during this monsoon quarter, is the quarter two. But we have already started seeing certain price movements in some of the markets. I think in terms of prices, East was the worst hit. During the monsoon, there was a drop around 20-25 rupees per bag. But in recent last 7-10 days, we have seen an increase of around 10 rupees in Eastern India. As also in North and Central India, there has been an increase in prices. So if the demand, everything will hang on what is the demand outlook which is going to come in next 2 quarters. if the demand is continues the way it is, and we really hope that the demand will definitely continue. I agree with Sahadeo when he says that there is a structural change. Rural and semi-urban is definitely, we are seeing a good demand coming in. I will say urban sector have also started contributing to the demand. And we hope that in next 2 quarters, it continues the same. It will definitely give us some headroom as far as the prices are concerned.
Navin, a large part of the demand for the cement sector comes from the construction sector, private construction or government construction, which also could be split into state construction. At a time when GST collections are low, government spending is difficult, states are finding it difficult to commit to more projects. What will happen to the so-called government stroke construction demand, which in a sense has been a main part of the driver? What we are witnessing right now is private sector demand, perhaps little bit of housing demand, which has come back, especially in rural area and small area. But that's just portion. Ultimately, the heavy lifting has to be done by the so-called, government-dominated projects.
No, I beg to differ, because if you look at in the overall consumption pie, your infrastructure as a segment contributes still about 20 or max 25%. It's still the housing which contributes in excess of 50%, 50 to 60% is the range there. So the demand driver indeed is housing and continues to remain. So yes, I agree that government push is equally important, because that has a spinner effect, money spinner sort of effect on the entire economy. It's not just on the construction sector, so to say. So the government, of course, has to come forward. But the feedback that we are getting is various Manrega projects, and these projects are indeed taking up shape. Now we can always debate that whether the pace of these public expenditure will continue, or will the government compromise on its deficit targets. That's a different discussion altogether. But my point is, as we speak, there is certainly some traction that we are seeing. And with all these parameters or challenges which you said remaining intact. So let's look at the current numbers, which are encouraging. More so going into, with the monsoon season, which is seasonally behind us, there will be some improvement further from the housing sector, individual housing, more to say, in the tier 2 and beyond. And government infrastructure, if not year on year, but at least even if it remains flattish on a year on year, it still contributes meaningfully. So, okay, let me put it also this way. We were negative majorly at an industry level in upwards of 35% in Q1. In Q2, Sanjay ji just said that the industry could be flattish or maybe marginally negative. So coming back to this normalization itself, according to me, should be a fair achievement this particular year. More so keeping a track that Q4, we should start seeing in some bit of a positivity, so to say. If that happens, I think next year we can again expect some decent normalization itself is recovery, according to me. So even if there's a normalization of 4-5% year on year in FY22, that will still be a meaningful recovery, according to me. Thanks.
Sanjay, what about pricing trends? Let's take a closer look, given the quarter gone by as well, going forward now, and how would you compare it sequentially, annually? Where are we really when it comes to pricing?
Well, as I said, I think we have seen some reduction in prices during the monsoon season, and each region has seen a different level of price cuts. I think East was the price cuts were ranging between 20 to 25 rupees. There has been price cuts in North and Central and South India also. But I think starting October, the kind of demand the industry has seen in the month of September, I think starting October onward, the prices have already started firming up. So my sense is that if the demand continues the way it is, I think the only weak link in demand is still the Maharashtra and the western region, which was largely COVID impacted region. A large part of the effect of COVID was there in that region. I think slowly that is also coming back to the normalcy. Once that also picks up, it will give a further boost to demand. And that will definitely have an impact on prices in going forward. So our understanding is that if not Anything more, I think we will be able to come back to our normal level of pricing, and whatever pricing we have lost in quarter 2, I think we'll be able to recover it in quarter 3 and quarter 4. That's what our understanding of the price is.
Okay, Navin, in terms of results, what are you factoring in? What's the kind of capacity utilization that you're anticipating for some of the key players? And, any scope for disappointment given where we're currently seeing some of these companies trading at?
So from a result perspective, my sense is that volumes typically will not disappoint given the feedback that we have been getting. Some of the companies, in fact, I'm expecting a very good growth in terms of EBITDA on a year-on-year basis, especially our topics like Ambuja and even JK Cement in the mid-cap space for that matter. So I'm expecting overall universe decline. If the previous quarter, the decline year-on-year EBITDA was 30-odd% for an industry as an average, I think in this quarter it will be flat to marginal negative, with some companies, like I said, even poised to post a decent growth. That said, now I think you asked about utilizations. So I think utilizations have a slightly a different take, because when you look at cement utilizations, they do appear low. But if you look at clinker utilization, and that too X of South, we'll still be in upwards of 80-odd%. So I'm not really worried on the utilizations, even if, like I said, simple demand normalization should get back utilizations to healthy levels in H2.
All right, gentlemen, we'll leave it there. Thank you so much for joining us this morning for that discussion.